Okay, now that we've gotten that off our chests, let's talk about some of the stories that we've heard just from our customer base of companies that are moving forward with very concrete ways to survive given existing market conditions. As much as we hate to see this existing in our market, it's the truth. It does exist, and people are responding in different ways. Like we mentioned, a lot are going to go down in a bunker/survival mode. A lot are going to, though, figure out very clear ways to continue to be successful. They are 100% on board with the fact that they are working for or trying to grow a startup, and it's either going to go big or they are going to go home. And they are making very clear, they are taking very clear steps to still be as successful as they would have been even non-existent market conditions.
Yeah.
I'll start out with one specific example. Startup I spoke with yesterday. They, before any of this, any of this crisis, they had a very clear path towards success. They still have a very clear path towards success. They do have the support of their investors and venture capital partners. They are still looking to add talent to their team. They do believe that this is actually a great thing for them, because whereas 90% of the market is going to go down in a bunker mode and not going to be on clear path towards either one, profitability, or self-sustainability or growth or whatnot, they've had that built into their model from the beginning. They weren't delusional in any way, and they are continuing on path. And they believe that when time comes to raise money in 6 months and 12 months, whenever it is, them having that much stronger of a business model, them having that much stronger of a path towards success, they will win that they'll win the money. The money will still be there.
Yeah.
It's just going to be a little bit tighter, a little bit harder to raise, but it will nonetheless still be there.
Yeah, I think it's one of the things that a lot of people are missing is that there are very few people who are saying that B, C, D rounds of funding aren't going to be available for companies that are well established. What a lot of people are saying is that those A round, like companies looking for seeds, angels, A rounds are the ones that are going to have a hard time, without a strong business model coming up with cash. I've heard from a lot of different people that it's not the B, C, and D rounds that are going to dry up. Companies that have a good business model and their VCs recognize they just need a little extra cash to, kind of proverbially weather the storm. Those companies are going to have not an easy time, but aren't going to have an incredibly hard time raising funding to make it through a little bit of a downturn.
Yeah. No, I think it applies just as well to the BCD rounds. If a company's gone A round, C round, angel round, but they haven't shown profitability after $10 million, after $20 million, I don't think companies are willing to take as many risks on those companies.
The basic benchmark's probably the same as far as like ability to turn a profit, ability to be valuable, things along those lines, but I have to imagine the bar is a little bit higher for a true startup. It's going to be harder to go from the garage to an office building than to go from already being in an office, kind of an established company, and getting that next round to kind of weather the storm.
But that's something that's been going on even before Sequoia's memo. Pretty much for the last year, we've noticed that less companies are getting funding, and the ones that are getting funding are the ones with the stronger business plans, and they're getting an enormous round of funding.
I wouldn't necessarily say I agree with that. I think I've seen some really ridiculous business models get funding in the last year.
Really?
Yeah, and I think a lot of the VC trends have shown. In Seattle, there was some surveys that venture capital was down. Definitely IPOs were down. There was a lot of things that were kind of off about the last year, but I still saw plenty of harebrained schemes getting funded.
I don't know, to me it seems like before where there were 50 companies getting $10 million each, now it seems like 10 getting $50 million. And then I look at companies like in gaming, you have companies like Tryon and Big Fish that raise freaking nearly $100 million in VC funding, which is insane. You got companies like RockUSlide raising over $50 million. You got Ning raising $50 million. You've got Webpaint raising like $30 million, just enormous amounts. It seemed like years ago weren't as common. Now it's much more common, but it's happening with obviously way less companies spread out.
Yeah, we talked about this a little while ago. Yeah. There's beginning to be a very clear divide between the haves and the have-nots. Just like during the first, during the Web 1.0, the initial web bubble, the winners clearly emerged. The Amazons, the eBays, Googles, the Yahoos, they clearly emerged. There was a lot of noise during that time. Mm-hmm. Half those companies went away, and the same thing I think is going to be happening right now. There's going to be the clear divide between the haves and the have-nots. And I think the point is, if you have a solid business model, if you have a solid path towards success, then don't lose confidence in your model right now. I mean, you're on a mission to change the world. why should that mission, stop or pause right now?
And
It should just
actually,
maybe be altered a little bit.
one of the folks that they commented on the post that you were reading off of earlier raises a great point, and they were basically saying, what in the hell does Sequoia think they're doing? Like, they're not the only funder of these companies. They're saying that across the board, every company is the exact same. Everybody should do this. Everybody should march to the beat of the same drum, much like you were saying, is like one shoe isn't going to fit everybody's foot. Like, there's going to have to be a different plan for everyone. You had companies like Google, PayPal, another great example of a company that went big during the last turn. They made smart decisions, didn't just bury their head in the sand and bunker down. They got more strategic, did things a little bit smarter, kind of caused them to really think about the way they were going to survive, and more than just survive, also top their competitors and really move on and become the next big thing. I mean, this is a great opportunity and the last web bubble proved this. This isn't just like me spouting off. The last bubble proved that this is a great opportunity for the companies that can stand out to stand out.
Right.
Just to actually follow up on that, as for example, this guy commented that Berkshire Hathaway, a huge investment firm, is telling companies that they've invested in to double down right now, get twice as aggressive, and swallow up market share while the other companies are flinching.
I think that's awesome.
I
love that.
We talked about, like, there was news came out on a couple of different blogs yesterday of some smaller companies being acquired by even companies still in startup mode. So startups buying smaller startups. What a phenomenal time right now. I mean, there's the saying that Wall Street's the only place where whenever things go on clearance sale, that buyers run from those sales. And I think there can definitely be something said for that. I think that there are going to be a lot of, especially very, very early stage, maybe even pre-A round funded companies that are going to be terrified of trying to make it in this market, who at the end of the day do have a great product and are going to be an easy sell for somebody who has a B, C, D round of funding, is driving their own revenue. Go out there and scoop up somebody who's really terrified of not being able to make it, probably sell for a lot less than they would have a month and a half ago.
Yeah, no, I agree 100%. I mean, I think at the end of the day, it's also important to understand that the venture capital business model is not going to go away. They still have money. They still have to invest in companies. The companies still have to go big. All that's going to change is the model of the companies that they invest in, the specific criteria it's going to take in order to get the money, but align well with what it's going to take to be successful, to have confidence in the fact that you do have what it takes to be successful, and keep going. Because for sure, innovation still is there. If you look at like the web marketplace, which is the marketplace where we spend the most time in, gaming, whatever, it's all going to converge into the web. The web is just really going to be the medium. But there's so much innovation left to be done. There's so much room for just the existence of products that aren't there right now. We're very far from being done as a marketplace. So someone go plant your flag in the ground, come up with like a solid foundation, solid business, and go for it.
Another thing that goes actually perfect with that, and kind of following on the last comment, but this guy says that during the Great Depression, you had companies like Kellogg, Procter & Gamble, Chevrolet, Camel, marketed very heavily and emerged as leaders, and the reason being that when consumers began spending more freely after the Depression, the brand loyalty remained with them.
I think during times like this is the time to get started and to part your way from the competitors. Otherwise, if you bunker down along with everyone else bunkering down, then come a year from now, 2 years from now, when the clouds part and everything's becoming a little bit more sunny and the herd moves towards growing again, you're just going to be one of the herd. You're not going to be any different. And the people that were kind of ballsy enough to make those moves are going to be the leaders. You're going to have a very, very, very tough time catching up, I think.
I 110% agree. Somebody on here said, what, does this mean we get no more Super Bowl ads for my startup? Sheesh, what's the world coming to? I think we have to be realistic that being smart in this kind of a market probably is an intelligent decision. Look at where you're spending money, be careful about it. Like we talked about with the startup that I was speaking with yesterday in section 1 of Pink TV about just talking about they had I think 10 open recs and they were going to go ahead and pare that down to 8. Slide maybe try to kind of compress a couple of roles into one. Making some smart decisions again kind of being careful, but again it's not about. It doesn't have to be left or right. It doesn't have to be black or white. All it has to do is be smart, be intelligent, progress in a strategic way.
Exactly. I think you're 100% on. I think I was talking to this guy who works for a VC firm, and he was like, what you're seeing right now are a lot of different extremes being established. Exactly. You're seeing a very left view and a very right view being established. And what I think will ultimately emerge is some sort of a middle ground. You're going to find like some sort of sense being made of all of this. I think at the end of the day, it has to come down to confidence. I have a startup that I'm working with who was gangbusters. He's already raised his money. He was gangbusters in hiring, and then stock market crashed, and he said stop. And then stock market went up, and he said, well, now maybe. So what are you gonna do? You know, I mean, you're gonna build your company based on like the ups and downs of the stock market?
Go big or go home.